to Crosstalk. I'm Peter Lavelle. As the great global economic financial contraction continues unabated, is it time to rethink capitalism as we know it today? Should the world still rely on markets to generate wealth when the rich only get richer and middle class is crushed? And is there a capitalism that can serve the interests of all? To Crosstalk the future of capitalism, I'm joined by Tom Palmer in Washington. He's a senior fellow at the Cato Institute. In New York, we cross to Arun Gupta. He is the founding editor of the Independent newspaper. And in Bangkok, we have Richard Duncan. He is an author and chief economist at Black Horse Asset Management in Singapore. All right, gentlemen, Crosstalk rules in effect. That means you can jump in anytime you want. But first, Masha, I'd like to go to you. Is capitalism doomed?
Well, it depends on who you ask, Peter. For many Western consumers, producers, managers, and owners, capitalism has been more than an exercise in wealth generation and distribution. It has been a fundamental belief in deregulation, debt-fueled consumption, lower taxes, and more political power for capital than for labor.
But the meltdown of 2008 and failed growth attempts since then have exposed the myths capitalism had built up over a generation. And many are now asking if the preceding generation was an aberration, and if capitalism as we know it is dead.
Karl Marx, it seems, was partly right in arguing that globalization, financial intermediation run amok, and redistribution of income and wealth from labor to capital could lead capitalism to self-destruct.
If it isn't death, then it's radical change, with key pillars stretched to their limit. Free trade reached a Doha Round impasse in 2006. Carbon trading still sees developing nations saying they shouldn't have to pay for what developed nations have already done. Job concerns have heightened economic parochialism. And deregulation? That path led to banking bonuses, Lehman Brothers, TARP, and massive banking debt socialization.
But when it comes to ordinary people, we suffer cuts, we suffer austerity measures. So it's about making that political argument and making it clear the problems of capitalism itself.
So as the global economy teeters, the generation where capitalism was seen as a self-evident and righteous end has passed. If it isn't dead, it will be different, and on the road ahead, more questions will be asked of capitalism and who it's working for. Back to you, Peter.
Thank you very much for that, Masha. All right, I'd like to go to Richard first in Bangkok. When people say it's the end of capitalism, what do you think it means, and what do you think they think it means?
Peter, hello. Actually, I don't think the economic system that we have now is capitalism. Capitalism was an economic system in which the private sector controlled the production process through savings, capital accumulation, and investment. And the government played very little role. Well, now the U.S. federal government spending $25 out of every $100 spent in the economy, and the central bank is creating the money and manipulating its value. Moreover, the production process is no longer driven by saving and investment. Instead, it's driven by borrowing and consumption. In 1964, the total credit in the U.S. was $1 trillion. Now it's $50 trillion. There's been a 50-fold increase in credit in the last 50 years, less than 50 years. This credit expansion has completely transformed the size of the economy, the structure of the economy, and in fact the economic system itself. In my view, we've moved from capitalism to creditism, for lack of a better word. And now creditism is in crisis because the private sector is incapable of repaying its debt.
Okay, Arun, if I can go to you in New York. It's Richard, thanks. Let me go to Arun in New York.
The economy is now dependent.
Let me go to New York here. That's a very interesting point that Richard brings up. We don't even have capitalism anymore. We don't even need to talk about its end because we're in a totally different system anyway. What do you think about that?
Well, I think we could talk about the myth of capitalism, the myth of the free market. There never has been such a thing as a free market. Governments have always intervened, usually for the benefit of capital. The railroad boom, of course, involved a massive transfer of wealth, especially in terms of land, to the railroad industry. The post-World War II capitalism boom was in many ways, especially in the West, was a fusion of the state and corporate interests. So there's nothing unique about that. And in terms terms of credit and financialization, these are nothing unique either. In the 1920s, you also saw a huge expansion of credit that fueled a stock market boom. Financialization goes hand in hand with capital. We should see the post-World War II boom as the aberration. I know we're going to keep coming back to this, but this was a period of unparalleled growth for unique historical circumstances. And we do have a hybrid system. Largely it is controlled by corporate interests. And the thing is, capitalism tends towards monopolies, as we've seen in many historical period. And these monopolies will exert power over the government to increase their share of the economy, to increase their wealth, to increase the upward transfer of the wealth. And that's what is really going on in this period. And again, it's nothing unique historically.
Okay, Tom, I'd like to go to you in Washington. What is different about this economic turn down for capitalism? We've already heard about credit. Was it the deregulation? Was it just preferential treatment towards corporation? Was it poor tax policy? What is unique about the challenges that capitalism is facing today?
Well, the big problem was a crisis of interventionism, and indeed Richard pointed out that state institutions, the central banks, pumped out gigantic amounts of credit. I mean, setting interest rates into negative territory. 2004, 2006, the Fed had negative interest rates. This is not a capitalist phenomenon. This is politicians intervening into the economy to pump it up and create a short-term boom. This created an asset bubble. This is a completely predictable result of expansionary monetary policy of that sort.
Okay.
And then interventionism through Fannie Mae, Freddie Mac, the Basel Accords poisoned the world financial systems. So what we've seen is a real failure of interventionism and cronyism, not free market capitalism. We have a real case of mistaken identity here as to what is responsible for the crisis. People such as Arun, who say it's an increase in greed. Look, greed is a pretty constant thing in human society, and there's no metric that showed it increased. But we do have very good metrics of Fed policy and governmental policy to create an asset bubble that then burst, and now we're living with the consequences. What we have seen, and this is something that really bears repeating, is a huge increase in per capita incomes around the world because of free market capitalism. India and China, China after 1978, India after 1991, literally hundreds of millions of people lifted from terrible poverty caused by socialism and lifted into middle-class prosperity. This is the largest poverty reduction experience in all of human history, and it's happened in our lifetimes.
Arun, it looked like you wanted to jump in there. I mean, one of the interesting things about today's capitalism, or maybe the capitalism of our generation, we've always associated capitalism with civil liberties and a strong middle class. Now, what we just heard from Tom is that we have rising middle classes in the emerging world, but we have in the industrialized world, we have middle classes that are being pulverized, okay? So capitalism means something different to different people in different places, apparently.
Well, first of all, in terms of India, having been there frequently, that's a nice fantasy to tell people that hundreds of millions of people have been lifted out of poverty. Something like over 80% of the population is in moderate to extreme poverty. A few tens of millions of families have been lifted out. But when you're talking about a population of over 1 billion, it's not that significant. And what you have also is massive dispossession going on, and we cannot, and that's important to remember, because we cannot separate any particular capitalist economy from the rest of the world. So the post-World War II U.S. led boom was in many ways based on super exploitation in the third world. Remember, this was an era of all sorts of wars and great instability in the post-colonial world, and a lot of it had to do with ensuring the flow of cheap commodities. Copper from Chile, tin from Bolivia, oil from the Middle East, bauxite from Indonesia, and so supporting all sorts of repressive regimes to ensure the
this
flow
is just
of
a
cheap
fantasy
commodities.
That we're hearing here.
What we've seen is that the instability has now moved to the center. You have these austerity programs that are now being imposed on the Western nations themselves, whereas in the 80s and 90s they were being imposed on the periphery, because the demand is always the same. by those who control the economy, that they need to have their profits, they need to have the wealth flow upward. So what we see is a system that is breaking down. But again, I don't think this is anything historically, if we're talking about the last couple of centuries, unique what is going on in this moment in terms of financialization, in terms of the economic crisis.
I liked what Tom had to say about fantasy, but let's go back to Richard first before we go to the break.
Okay, I've lived in Asia for most of the last 25 years, and I've watched Asia be transformed by the economic boom that's taken place. But the boom here has occurred for one reason and one reason only. It's because of the U.S. trade deficit. The U.S. trade deficit grew to be $800 billion. That was $2 million a minute. That's what enriched the rest of Asia. That's what made Asia boom. And that trade deficit was paid for on credit. Now that brings us back to our credit crisis. Now this economic paradigm, credit expanded every year in the United States from 1947 until 2009. And when it started to correct, then the crisis started. So we're now at the end of this 40, 50-year debt-fueled economic paradigm, and it looks like it's going to implode.
What do you think about that, Tom? Earlier you said fantasy. Go ahead.
And it will take Asia down with it.
Well, we heard from Arun we heard just a lot of rehashed dime store Marxism, and it doesn't stand up to the facts. Let's look at some actual facts on trade flows. Take the American economy. Does a much greater trade with Canada next door. That's the largest undefended border in the world, and over $600 billion a year of trade goes back and forth across that border. Fact of the matter is that people in poor countries in Africa, for example, suffer from a lack of trade, not too much trade. So this whole periphery core, as I say, dime store Marxism just doesn't stand up to analysis of the facts. And if you look at India, and I recommend Gurcharan Das's very good book,
All right,
India
Tom, I'm going to jump in
Unbound.
here, and I want you to continue this point
Reforms
after a
that
short
changed
break.
the world.
After that break, we'll continue our discussion on capitalism. Stay with RT.